I'm Don Reinke, and it should come as no surprise that I'm another partner from Reed Smith. I previously chaired our venture capital practice, and currently I chair our U.S. Securities and Capital Markets practice, as well as being a reformed serial angel investor. I lost my first investment more than 25 years ago, and so I continue to practice law to support the habit. And hopefully I'm going to learn something at today's panel to maybe change that track record. I also want to put a quick shameless plug for our fourth annual Capital Markets Conference that we're holding and sponsoring in San Francisco on Friday, November 2nd, where I'll point out you'll get both lunch and a hosted reception. And if you're a lawyer, we're going to double your CLE credits to 2 if you show up. But it's not just primarily for lawyers. It's actually been a pretty good conference. With that, I'd like to basically, and I've been chasing the money trail for these years, primarily with tech companies. And I think that's going to be the focus, or a good portion of the focus of this panel this morning. To use a famous movie line, show me the money. And I know we've been referring to the monetization of big data. I'd like to make it sort of a little more basic than that. And my question, the overall question I'm going to ask the panel is, where are the big bucks for big data as an investment? And with that, I'm going to provide a really brief introduction to both of our three panelists. Then I'd like each of you, if you could, to kind of expand upon how you actually showed up today and how big data has become, a significant portion of your professional career. And so to my far left, your right, is Professor Greg LeBlanc, who is a lecturer in the Haas School of Business as well as Bolt Hall School of Law. And then in the middle is Matt Oko, who is the founding partner, one of the co-founding partners of Data Collective, which is the first big data only early stage investment fund. And then to my immediate left is Jake Floenberg, who recently joined Excel Partners earlier this year and is the former director of product management at Splunk. And with that, maybe Jake, I'll start with you, and maybe you can expand a little on your background and what you do.
Sure. So sort of grew up in the big data industry for the last few years. I was at Cloudera in its early days, and then at Splunk, and I joined Excel about a half a year ago. Excel is a global venture capital firm. We invest in the US about $1.3 billion out of 2 funds, offices in Silicon Valley, New York, London, India, China, and we have a dedicated big data fund as well, and a group of esteemed technical advisors, and we're tremendously excited about the trends in big data, and I think as much as we'll talk about all different parts of the stack, down from the infrastructure to the data platforms, the things that we're most excited today in are things really above the data line, things that are not just things that help you put data somewhere, but help you actually get some value out of that data.
Matt?
So we're a small group of guys who have been investing in very difficult technologies, solving very large market problems that many of our colleagues, with the actual notable exception of Excel, have generally disdained or thought were grungy or too down in the weeds. So we've been at it for, it's getting towards 25 years. We've been seed or very early investors in everything from ZenSource, which is the backbone of pretty much all cloud computing that's performed today, to MetaWeb, which is currently running all of Google's semantic search, to stuff like VeriSign earlier on, to things that are leading the next generation of cloud computing and deep infrastructure, like Piston Cloud. Along the way, we made some random accidental consumer investments, mostly to see what was going to happen in this large market. So seed stage investments in Zynga, very early stage, relatively speaking, investments in Facebook, companies like Tango, Living Social, and a few others. So having accidentally made money along the way, we got beaten by our limited partners into forming a new fund, and we just try to do stuff that's sufficiently interesting that Jake will do it later.
I teach both these guys. I teach strategy, law, finance, and statistics at UC Berkeley, and the research side of things that we at Haas Berkeley are studying what's going on in the industry and trying to make sense of it, figure out where the next steps are going to go. We're also on the teaching side of things very interested in trying to figure out how to give our students the skill sets that they're going to need to useful on graduation and make sure that education is with.
Thank you. Well, maybe I'll address my first broad set of questions to Jake and Matt in the market opportunity world. And as you look at the market opportunities in the IT sector broadly, whether it's mobile, software, et cetera, where do you see the biggest opportunities and where does big data fall within that? And then some of the subsectors, if you could maybe touch upon them, is how big do you see the overall big data opportunity? And then within big data, maybe you can also touch upon both the horizontal and the vertical markets to the extent that you've broken them up in that perspective. And so with that.
Nobody's doing anything for the rest of the day, right?
And keep that within a 2-minute response, please.
A Twitter post.
I'm happy to. Sure. So the big data opportunity is obviously, in our opinion, big. Market estimates in terms of the big data market size, 2015 ranged somewhere between $17 billion and $50 billion. I think a really interesting observation is at this point the largest chunk of that is services, and a lot of the human expense and training that goes into getting value out of these tools is actually not included in those estimates. So as you think about the commoditization of storage and compute, at the same time the cost of these very precious resources, these data scientists, is skyrocketing. And so thinking about how we're going to actually address the human capital challenge is something that's definitely top of mind. I'd say big data is extremely correlated with a lot of the other opportunities like mobile and cloud computing. Mobile creates a lot of new ways to get and use data, including all the data that the apps throw off, as well as location-aware services. Cloud, from a scalability and elasticity perspective, a lot of the workloads that people are dealing with are dynamic and change over time, and having resources that you can spin up and spin down as needed is critically important. As I sort of said before, I think the newest part of the landscape are those pieces beyond, above the data line. As some of the platforms are finally starting to mature, a wider audience is now able to make use of them to build interesting things, whether it's offering data itself as a service, data products that help people manipulate and explore data on an ad hoc basis, or big data apps that are really more verticalized or workflow-oriented solutions. And I think you've seen with the success of companies like Splunk in recent years that technical audience is finally starting to get served by those data products. But a lot of the new opportunities are in these big data apps, and some things, quite frankly, have some of the largest companies today are big data apps, whether it's what Facebook does with its data or Google does with its data. By some sense of the word, it's a big data app. But helping people fulfill those verticalized functions more efficiently. You look at the high value data, product usage data, marketing data, those areas are ripe with opportunity. Others have some political and selling challenges, whether it's healthcare or personal identity data, financial services, of course. I think there's an opportunity to create a tremendous amount of value across the entire ecosystem.
So we'd be poor big data investors if we didn't have some hard, sharp, empirical definitions for what big data is and what we do. So to us, a big data investment doesn't qualify unless it does at least two of the following three things. So, or have two of the following three criteria. So the first is it has to have defensible technology to genuinely address the exponential explosion of data. So this statistic has been thrown around a lot, but I want people to try to think about it. In the last 2 years, more data has been created in that 2-year period, so more humanly accessible data, than in all of human history combined. That's pretty impressive. In the next 2 years, that statement will be true again. So the volume of data that is accessible to human beings and the machines that we use to process our data is at a minimum doubling every 18 months to 2 years. From the perspective of human intellect, that's unsustainable. It's also unsustainable from the perspective of data center capacity at a certain point. So number one for us is tech that deals with that physical and operational problem. The second criteria is that a company has to have defensible technology that addresses the exponential reduction in processing time against these ever-increasing amounts of data. So for example, Intel used to say, yeah, you know, we run a very, very complicated supply chain analysis once a week. Now they run it once a minute. That's a massive reduction in the amount of time, and the amount of data being fed into that has gone up. The third criteria for us is a company has to put on the table with defensible technology an exponential increase in signal to noise or business analytics value. So coming back to the Intel example, they used to say, yeah, you know, within a 1% margin of error, if we know what's going on in the continental US in terms of demand for laptops, we're doing pretty well. Now they want what you might refer to as 5 or 6 nines of accuracy. Basically, they want 1/10,000% error window. And by the way, they want that for data down to the level of a Chinese hamlet. You know, do 75 people in Chengdu have an interest in buying a new Lenovo laptop? So these three criteria are how we invest, and the layers at which we invest, or the sectors, to answer your question, are the following. Infrastructure and cloud. So this is the stuff that handles the physical problem of petabytes of data. It handles the security, the transmission, the raw database capability, and to Jake's very important point, the federation of data. So there are a lot of people in this room who are lawyers or touch on the law in some way. When you have a company that deals with HIPAA and Sarbox and all the mutations of Dodd-Frank and 17 others, let's say they're involved in long-haul trucking somehow, 14 different federal agencies, 30 different supply chain partners, and 10 million disgruntled customers, how do all those people touch a petabyte of data that's changing every second and do so in compliance with all those regulations? So that's the infrastructure layer. There's the analytics layer. So we actually just co-invested with Jake in a company called Trifacta with some brilliant professors out of Stanford and Berkeley that's trying to solve the problem of delivering to ordinary human beings an understanding of these vast multi-petabyte data pools. So the analytics layer, that's how do human beings touch all the crap that's down in the infrastructure layer and understand what's going on. And the top level, again, Jake alluded to this, for us is what we call SIC code transformation. So it's a vertical market industry, could be a very obscure one, could be gasoline jobbing. How do people move excess volumes of gasoline between small independent service stations? Or it could be something as large a market as payday lending. There's a deal that was just announced this morning that we did with Andreessen Horowitz and Kleiner called LendUp, which is transforming the short-term small dollar lending industry. In those industries, can someone take deep vertical market expertise, an unusual insight, combine it with this next generation analytics on top of the massive amounts of data that can now be accreted and processed, and go gut everybody else in their market sector and take all the money? So as Jake alluded to, we do a big chunk at the bottom, a fair amount in the middle in analytics, and every now and then when we see somebody ready to take over a market using the tools that are associated with this industrial transformation, we'll do something in a vertical market.
Thank you, Matt.
Oh, one more quick comment. Ironically, we actually think the market for the first two layers is a little bit bigger than what Jake alluded to. Jake's about to be a very rich guy because the last thing that I saw quoted was a $17 billion 2015 market for Hadoop only, which would do well for Cloudera. The figures that we've seen and the volume that we see in terms of uptake in the Fortune 200 companies we talk to suggest that pure big data tools, forget any of the vertical market stuff, are close to $100 billion in 2015. This is a transformation of the IT business top to bottom.
Thank you. Greg, I want to continue on this sort of the sector focus and maybe start with you and then have Matt and Jake weigh in on both education and the financial markets. And in fact, I was interested in the education market 2-3 months ago. The VC journal, Venture Capital Journal, had its cover page and focused its primary articles on the education sector, which has up until now sort of, it's been very, very difficult to get any traction from VC investors. So I'm curious how big data may be impacting education. Then obviously the financial market sector seems to be a more obvious area.
Well, just to follow up on the earlier points, I think the vast majority of the benefit that's going to accrue to the society from big data is not going to be monetized. I mean, it's going to accrue to the users of the information, and the part that is monetized will most likely be monetized outside of the tech sector. I mean, it's going to be the companies that use the information. And I think that just if we look at the last, we can think of it as the last technological revolution in the introduction of the PC. So many aspects of the PC ecosystem have become commodified, and in that generation of innovation, it was intellectual property which was the barrier to entry, the thing which prevented things from being commodified. I think that nowadays the big barrier to entry is ownership of the data itself. And so if I were looking at business models, I would look at the ones that have a strategy for gathering, protecting, and safeguarding the data. And in many cases, those are at the industry level and not at the tech level. So the actual manufacturers, the actual vendors, and in the tech space would be those that are actually dealing with the data. So within education, I mean, education is a difficult one simply because it's hard to scale a lot of what you do in education. So we just introduced we're introducing online education tools at UC Berkeley, and almost every university is introducing online educational tools. And the hope is that you can use data to customize the educational experience. But I think that there are limits to that, and so I don't think education is going to be one of the areas where you're going to see a massive increase in the use of big data. Financial markets, of course, it's already happened. So we know that the majority of trading right now is being done by high-frequency traders, all of whom are using massive amounts of data to design their strategies. The one thing that's interesting there is that the modeling that takes place, much of the modeling is about what we might think of as data, but a surprisingly large chunk of the modeling is modeling the other modelers. And so it's not just modeling the data or understanding the data, but it's understanding how others are using the data. And I think that's going to become increasingly important, especially when we get to some of the sort of later questions about how what the broader implications are going to be.
Well, it looks like I've got another loss then. My son has got a startup, but he's at Pomona College still, but he's focusing on education and big data.
Yeah.
So.
Well, I will say that the education is changing dramatically in terms of how we're trying to train people to use data. And we are woefully behind on that, especially in the business schools. Business schools and law schools, I think, are very slow to adapt, and they've been slow to incorporate into their curricula the kinds of tools that today's students need to understand what's going on. I mean, in the financial markets, the financial crisis was not the modeler's fault. It wasn't the problem. It wasn't a problem with the people who were using the data. It was a problem with the people who were managing the people who were using the data. And ultimately, the people who are responsible and the ones who are doing the management are not the ones who are actually in direct contact with the data.
So actually, I want to follow up on that. In education, I would draw a contrast between the United States and call it the vanguard of Europe, the traditional G7 countries. In that world, data privacy, whether it's in education or something else, and personal ownership of data is really important. In fact, we're co-investors with Jake and his firm in another company called Crux, which has, which was a compelling investment because they developed ways to protect both websites and content vendors' data exhaust, the things that they were learning about their customers from each other. So right now it's very hard to blind data. If I'm Amazon, I can't give most people, most of my supply chain, even if they have some radical analytical tool, an insight into why somebody bought something or what pages of an ebook were compelling to them without disclosing tremendous amounts of information that I don't want to disclose. Likewise, as an individual, you may not want a tracking cookie following you around everywhere you go on the web. Crux allows very, very deep analytics to happen between any arbitrary mix of individual human beings and websites, all completely anonymously. It's very deep, dark math, and we're happy to be investors in that and co-investors with Excel. But that's a first world company. I got pitched by a company 2 weeks ago that already has contracts with some of the largest countries in the world. China's not one of them, and I can't disclose whether it's Eastern Europe or Latin America or Asia. Those countries have said, our citizens have no expectation of privacy. We're not giving it to them because while you guys run around suing each other, we're building the 21st century. So here's what we're going to do. We're going to track every single citizen from cradle to grave. In fact, we're admitting to you that we already do much of that. We're tracking their educational performance. You may think of our countries as third world hellholes, but guess what? We skipped broken down 1989 Dell PCs in the schools. We've gone straight to Android tablets with persistent Wi-Fi or 3G connections. We're watching what those kids do. When a kid leaves school early and he gets into his grandpa's truck to go sell bitter melons somewhere along a dusty road, we're tracking the outcome of that. We're looking at tax revenue. We're looking at tolls on the highways. We're looking at police records. Does a strong family, speaking of big data analytics, does a strong family account for better performance later in life and not being arrested and becoming a tax-paying citizen? Or is education more determinative? I mean, really deep questions. And the stuff that they're already getting out of this, in my opinion, is going to confirm very long-term, very material, sustainable economic advantage. So there's a lot of stuff going on outside the US that's really fascinating in education, and it is a sterling example of your point that the knock-on effects of these big data tools may be in the trillions of dollars, even if we tech guys are happy with $100 billion.
Maybe going beyond that, from all three of you, I'd like to hear more about the startups you're looking at, and beyond just a couple examples, Matt, that you've given. What startups are you, to the extent you can tell us, that you see in terms of having disruptive technology, as well as those that you think are most likely that you're going to be able to monetize, make quote-unquote big bucks? What's out there that you've invested in or you've seen that look like they have potential?
Sure. So sort of as I alluded to before, I think the area that we're seeing the most, I guess, deal flow at this point are the big data-driven apps, right? That have the potential to disrupt markets, both by creating new markets and by disrupting the low end of the markets. The human capital challenge is something we spend a lot of time thinking about. A lot of people, McKinsey points to a study that says there's 140 to 190,000 data scientists that don't exist today that need to exist in some period of time, and if they don't learn how to write MapReduce, then we're just going to be in a world of pain. And we sort of look at that and say there's a big role that software can play, and it's very unfortunate that it's this hard to get value out of the data. So as Matt alluded to earlier, one of the companies we just invested in is a company called Trifacta, which really helps bring the best database, machine learning, and visualization practitioners in the world really together to help go tackle this problem of how do I manipulate data, how do I get guidance on what transforms would be appropriate so that I can use the data in the rest of my tools and power the rest of that stack, whether it's more traditional BI tools or putting it into R or something else. In the marketing realm, I think there's a huge opportunity to take data, different pieces of data, put it together and correlate. This social media ROI is something that's been relatively elusive, and some things that are pretty basic conceptual feats like correlating CRM records and social media is much easier said than done. Open data, a lot of people are very excited about open data. We're really more excited about the value you can get from open data. You open up data, and most people just have a pile of data. It's not terribly useful. Most people don't want to invest the time or energy to perform analytics on that data. So really those verticalized packages of information that help people do their job better. And then there's some really interesting pockets where all tides rise. So fraud is a great example. Most financial services institutions would love to reduce fraud, and if they could do something to help the entire industry reduce fraud, they'd probably contribute. So areas where hosted services can aggregate data and learn from each other, right, to continue to improve those models, creates a huge amount of defensibility and can actually increase efficiency and reduce drags on entire industries. So those are just a handful of some of the things that we're seeing.
Yeah, I mean, we have the good fortune to be seed investors, so I can actually name names. One thing that probably is interesting or may not be evident to the audience is how the venture capital industry has contracted in the past few years. So I just add the comment that if it's not Jake or 5 of his friends, it's probably not a VC firm that one of our entrepreneurs wants to do business with. But the problem is if Jake mentions it in detail, depending on who's having breakfast out there, one of the 5 other guys may hear about it. So I have the freedom to give concrete examples since we're not really fighting anybody for seed stage deal flow. So specifically, the kind of things that we're interested in or that we're seeing, I mentioned a couple, but some of the ones that are really transformative, and some of the ones that I think are on their way to your desk, are companies like Cloud Physics. To amplify on Jake's point about crowdsourcing solutions and solving human labor capacity problems, there's a big data problem in the data center, and Jake and his colleagues at Splunk were pioneers in addressing this, but there's another level of questions that's very hard to answer. So Splunk does a fantastic job at churning through petabytes of data and saying, your systems fell over here. But they don't, Splunk and nobody currently in the business says, your systems will fall over here in the future if you do this. So there's a very small amount of big data analytical talent in the data center, so people who monitor, manage, and analyze these logs. There's a very small amount of talent that actually can intuitively understand that if they poke here, that there'll be an explosion there that will cause the CFO to be arrested for Sarbox violations. And so what Cloud Physics does is take all of the data from very large data center customers, roll it up into a single cloud infrastructure, anonymize it, crunch it, and spit it back out to all participants equally and say, hey, you guys now have a platform on which you can share your insights. So Chevron can say, yes, here we had a problem, and by the way, some of the data comes from Splunk. We identified using our very valuable Splunk infrastructure, X fell over. We learned that Y caused the problem. Oh, now all of a sudden JP Morgan knows something that they didn't know. But it's very difficult to do that. What Cloud Physics makes possible is doing that without Chevron saying, exploit small Indian tribe in Amazon _ machine with records not to be disclosed to X had a fault. So keeping all that stuff anonymous, sharing it, this gets to the data federation point that I was making, is very hard. Cloud Physics does a great job. And it's one that, not entirely jokingly, we've sent to our colleagues at Excel to take a look at. Another example in this space, a company that's kind of addressing the human labor problem that is a seed deal, is called Sumo. These are 7 or 8 brilliant Stanford kids, and what they figured out was that LinkedIn does not serve the college community at all. How do you know whether you want to hire a 21-year-old or a 22-year-old? Well, They had an internship. Well, it turns out the internship was at mommy or daddy's Fortune 500 company, which is kind of a problem with those Harvard folks. Sorry, I was a Yale guy. I got to get a dig in every now and then. Or Stanford, as the case may be. So you don't know whether that 21 or 22-year-old human being has any value to your organization at all, even if they're in computer science. So, I mean, Jake can tell you he probably saw an endless parade of people with fairly good grades and impressive resumes who turned out to be paper tigers. And one of the things that distinguished both Splunk and Cloudera is that they moved the paper tigers out of the staff quickly, but not all organizations do that. So how do you hire correctly to begin with? So what the MindSumo guys did was build a secure crowdsourcing platform that allowed companies, whether they're large tech companies like Microsoft or Facebook or IBM, or the smallest startup or the local garage, to say, I need X, and to allow college students to respond to those challenges. So the local garage might say, I need a new lift mechanic that doesn't use lubrication because paying for lubrication oil is costing me $50,000 a year. Or Microsoft may say, our data center is falling apart. Can one of you kid geniuses figure out how to save us $1 billion? The problems being submitted by these companies are up and down the stack. They're not pure tech. Some of them are even philosophical or generically product design problems. The company's doing fantastically well. The big data approach to this is twofold. One, all of the results, modulo all of the contests, modulo the educational background of all of the kids, down to the classes that they took, are crunched and not just reported up to the company. So your most successful contest winners have these characteristics. That's great for the companies. For the students, they're saying, son, you came in number 5 on that IBM challenge, but the 4 guys ahead of you all took Berkeley CS 319. You might want to pay attention to that. So the students are getting real-time feedback on what they can do to improve their outcomes. And if they do this 7 or 8 times, when they show up at your doorstep, whether it's for a law firm or a nuclear physics job at Slack, they've identified themselves as people who can actually solve real-world problems. And we think very highly of these guys.
So I want to save about 5 minutes and I know we're running overtime a little, but Greg, I want you to play devil's advocate to what you've just heard in terms of, is the average Joe, the average Mary off the street really going to benefit from these new startups in big data? Are we are we overloading our society with big data? Sort of, what's your thoughts in a minute or two?
Well, it would be hard for me to play devil's advocate because I think the answer is no.
Okay.
I mean, I think that the average person on the street is going to benefit enormously. Is going to increase their quality of life dramatically. And forgetting about delivering better services, forgetting about eliminating waste throughout all supply chains and getting prices right and so forth. I think that even within the domain of marketing and advertising, there's going to be massive efficiencies in matching sellers and buyers. Right? I mean, I think that in the earlier panel they talked about, hey, customers are resenting the fact that Facebook is worth $18 per user. I think it's actually the opposite. I think that over time, customers will find that targeted advertising will be so valuable to them, save them so much time and effort, and provide them with the kinds of products and services that they're looking for, right? In a much more efficient way that they may even be willing to pay for the kinds of services that are currently given to them for free, such as I'm not saying that Facebook will ultimately charge, but I'm saying that people will change their viewpoint from advertising as something I endure to advertising as something that I invite and welcome. And so even on that domain of matching sellers and buyers, I think that there's room for such an enormous improvement in efficiencies that the average person will benefit enormously.
Thank you. let's take just 2 questions. I know Matt's got a board meeting. To the extent that Jake and Greg can stay afterwards, you know, invite questions coming up afterwards. But do we have any questions right now from anybody? If not, just so that I know a lot of people have tight schedules, I want to thank our 3 panelists and thank everybody for attending.